Let's have a frank talk about our stock market. Let's have a frank talk about the stock market and about the economy. I'm going to give you 10 reasons. I'm going to give you 10 reasons why we might be in trouble. Let me give you those reasons. I know we don't want to hear things like that. I know we want to think that things are going to go back like they were last year. But it's hard. It is hard to fathom the changes that are happening. I know that you're hearing it all over the place. But I want you to hear it here because I want to explain it to you. I want to explain it to you because it's what this channel is about, right? I want to make sure that you subscribe to this channel. I want to make sure that you like this thing, okay? I want to make sure because I want to know that you understand what's going on. At the end of the day, not really selling anything except maybe a couple of subscriptions. But really what I want to know is I want to make sure that you understand what's happening because at the end of the day, I am an educator, okay? So what are the 10 reasons where the stock market is probably going to be in trouble? And remember, the stock market is in trouble when you don't think it's in trouble. Okay, when it goes up, that's when you have to worry about it. So first of all, the dollar is weak. What does that mean? It essentially means that investors don't want to hold the dollar. Why not? Why don't you want to hold the dollar? Well, because at the end of the day, there seems to be hesitation about the future prospect of the country. Or they are worried that because of political reason, they will just simply dump treasuries because, China has threatened to doing it in some other country. They don't have as much US debt as we think, but still that could be an impact. But the point is that they're concerned that the US might not be able to make those payments. What do you mean by that? Well, you're $37 trillion, fine. When the debt comes due, how do you pay the maturing debt? Because you have to pay for the debt, and you also have to pay for the interest on the debt. And when it's time to pay for that interest, the way you pay by the interest, you borrow more money. Now, obviously, if the rates is too high, that's a problem. So the dollar is weak because there are some concern. And I know the dollar is weak because, first of all, it's trading higher and higher against the euro. That's one thing. But also, the fact is that the rate on the dollar is higher than the euro. The treasury is paying higher. We're paying like 4.5 or 4.5, which is higher than the euro, and yet the euro is trading better than the US. So you would want to own the US dollar, right? Because you're getting paid more money, but yet, no, it's not happening. They're concerned that either they have too much of it, and then at some point, you may not be able to pay us back. You may not be able to refinance the debt. So that's something you need to monitor. I know not everyone is aware of it. They want to know, is the market going up, market going down? You need to understand the dollar. The second thing that you need to understand and realize is that there's uncertainty out there. How do I know? Well, look at the latest soft data. It all points to uncertainty. People are worried. They don't want to buy. Look what's going on with the airlines, a little bit slowing down in terms of booking. Look what's happening when we look at investor confidence. That is down as well. Next, the market is still overvalued. Yes, the P ratio is still pretty high at 31. We haven't had a crash, a real crash. I'm not talking 20%, I'm talking 35, 40, 50%. That's what we're looking for here. Now, we're not looking for it, but we could benefit from it. Remember, you could always buy puts. You could always take a look at my Patreon channel. I give you a bunch of stocks and also stocks that do well when the market doesn't do well without getting into options. We're still overvalued. Okay. Now, why are we overvalued? Well, because from last year, it was quite a bit and it was too high. And frankly, even if Trump didn't do or say all the things that he did, and even if it wasn't Trump, we still would have issues because the market is overvalued. And there's a lot of things under the belly, which we're going to talk about, that really creates trouble for this economy and the future of the U.S. Number 4, well, the 10-year yield, what can I say? It's too high. It was too high. In fact, that is what might have pressured Trump from basically saying, you know what? We're going to 90-day tariffs, even though they said that it was part of the plan and all that. Okay, the point is that the yield on the Treasury crept up and went up and up. That is a problem. Why it's a problem? Because you can't refinance at 6%. It's impossible. You would have a credit event. What is a credit event? You cannot pay your debt. Remember, there's two things out there. There is the price risk and the credit risk. The price risk is when we look at the stock market. Is it going to go up? Is it going to go down? What is the likelihood that it goes up and down, and what moves it? Blah. But then you also have the credit risk. Can you pay your bills? Can you pay your bills? If you can't pay your bills, then you're in bigger trouble, because that puts you into bankruptcy. And that, my friend, you are out, and they sell everything. And this is the event that they were concerned last week when the yield crept up. They said, listen, you can't have 100 countries with tariffs all over. This is crazy. You're killing us. So we don't want to hold your dollar anymore. And therefore, we're selling treasuries and the yield goes up. Number 5. Well, what is Trump doing? What is his strategy here? Is he making it up as he goes along with everyone with him, all the advisors? Is there a plan? What are they thinking? What are they doing? What are they planning? It's the heart of the deal. You ask for this, so you get that. Yeah, but we're not buying properties on the East Coast here. We're managing a country. We're managing a mood. We are managing a feeling, a future. Is this appropriate for that type of situation? He's in charge. We put him in charge. We have to go along. And number 7, we have too much debt. I mean, I keep saying it over and over. We have $37 trillion. The only way for you to reduce that debt is simply by either having growth, meaning so you have growth in the country, so you could collect more taxes and pay down the debt. But most of the debt is driven by entitlement, Medicare, Social Security. Are you ready to cut those? No? Well, then it's going to keep growing. Or you got to do what happened in Greece. You may be tied to that. Like in Greece, what they had to do, they basically had to increase the taxes. They had to extend the maturity of you going to retirement. Italy is 70 years old, people. Or you had to cut some of the benefits. And the money that you would get when you would retire, you would get less money. I mean, this is stuff that happened. Listen, it happened in Greece. It happened in Portugal. Forget Latin America, but it happened in the Western countries. Could it happen to the U.S.? You keep pushing for it. You keep poking at the hornet's nest, and things are going to come out. Number 8, the U.S. doesn't save enough, right? I mean, what's been happening is the U.S. has been the piggy bank where we spend and spend and spend money from everywhere to buy all these things that these people are making overseas, and we borrow to be able to buy these things. So now it's getting to a point where you got to save more money. No, well, I guess you got to borrow more money then, because you don't want to lend us the money. Well, then we're in trouble. Okay. Number 9, people don't like the U.S. anymore. How did that happen? Well, I guess they thought that the U.S. is going to keep protecting them, buying them, spending for them, and Uncle Sam would keep spending and spending, but that can't go on forever, right? I mean, they realized that, listen, we can't afford this lifestyle. What do you mean, said Europe? You're not going to protect us anymore? I mean, we can't. Well, can't you send more weapons to Ukraine? We give the stuff away. No, it needs to stop, but I thought we were going to go on forever. Yeah, well, we thought our debt would go on and on. That's what's been happening. It's too much. It's enough. So it needs to stop. And number 10, the hard data has started to slow down. We're seeing some hard data. Be careful, the hard data is coming out, and it means that we're slowing down. Maybe we were always on the cusp, according to some pundit, we were on the cusp of going down, and we didn't really see it, and we thought that the Fed was gonna help out last year, and they did, and they thought the Fed's gonna help out this year again by lowering rates, but they're not saying anything. He's saying, I don't know what's going on, I'm not doing anything. Which, I don't know how politically driven that is, because they don't seem to like each other, Trump and Powell, but maybe that's what's happening. Maybe he's waiting to see what's happening. If the Fed is not going to come to the rescue at some point by lowering rates, after all, the inflation is on its way down. So what's going on? So all these things, it's too much.